FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it's 9/4/19. Hey, were you lucky enough, if you're down in Florida on the East Coast, to avoid the wrath of Hurricane Dorian? Did you avoid a disaster like I did? You know, it's really getting harder and harder to avoid these bombs blowing up, whether it be the weather or trade wars or economic malaise, whatever. Dollar, what's going on with the dollar? Why is it going up along with gold? All these are good questions. Hey, as always, send me an email, kl@kerrylutz.com. Do you have an opinion about the trade war, about the price of gold, or the price of tea in China? That's one market we don't follow, is the price of tea in China. But if you're interested, we'll start following it. In any event, our good friend here is here with us and now, David Moadel. And David, we find you at portfoliowealthglobal.com. So, hey, the market was up today. Happy days are here again, right?
Well, if you're willing to put the word happy in quote fingers, which I know you cannot see right now, but I'm doing some serious quote fingers right now. Yes, happy days are here again, evidently. And thank you for bringing me back onto your program. I really appreciate it. I am in South Florida, by the way, and the storm didn't hit nearly as badly as many people had predicted it would. So we're very fortunate, and my heart and thoughts go out to those in the Bahamas and other islands. Yeah. It was really, really devastating. But
very sad.
We have to be prepared for things like that. Just because the storm didn't hit me or my family directly doesn't mean I wasn't prepared. It would have been crazy for me to say, oh, I didn't get hit this time, so, I don't need to get hurricane shutters. I don't need to get goods, canned goods and everything, other provisions. And we have to be the same way financially. There's a direct analogy here. Just because we're getting away with being unprepared, for the past 10 years or so, doesn't mean that we can continue along that path. For people who don't know who I am David Moadel, and I'm with portfoliowealthglobal.com. And we have a newsletter over there. I want to invite everybody to check it out on the homepage. Go ahead and sign up for that. No obligation, no cost to you. And we're in the business of educating the public so you can be prepared. Even though the storm may not have hit yet, when it does, it's going to be a category 5, 6 or more.
Yeah, well, I couldn't agree with you more. I will tell you this. I knew from the get-go that the storm wasn't going to come here and that they knew it. I don't want to be all conspiracy theory-esque, because most of them are garbage. I'm not going to say the theory the hurricane was put on by the deep state and, this is what they do and they're out to get us and all this. No. What I know is that it's a question of this. No weatherman has ever been fired, no meteorologist, for predicting a hurricane was going to hit and be catastrophic. That wasn't. All right. And this time was no different. So that's all I'm saying is I knew that the path of normal hurricanes, they don't go east to west. They will travel east and west, but they don't go in a straight line. This track has been done a number of times before. You'll never have a direct hit on Freeport and West Palm Beach, or it hasn't happened yet. I was willing to take the risk, but I did have a plan as well. Like you were saying, you got to have a plan. I was prepared to get out of here, mainly if the lights went out, if the winds got to a certain point. But I think that life is the same way, that you got to pull out the hype from the reality, but you got to be prepared nonetheless that this might really have been the big one. And if it was, hey, guess what? I was ready to go down to Miami. because Miami was bypassed by this storm, which is another real unusual thing. It's almost unheard of to get a hit in Palm Beach County when the storm is bypassing Miami. That's the other reason I was relatively certain about it. But I wasn't stupidly certain. I'm not a meteorologist. I don't pretend to have insider knowledge. This was just from experience. This was the voice of experience, or the, having watched all of these hurricane hype events, and they do hype it, That's what they do. That's what they're paid to do. And I'm okay with that because, sometimes the average person, you get, complacent. And like you said, we've had 10 years of complacency of not having to worry about markets going up or down and being covered by the Fed and the put, the Greenspan put, all that good stuff. You know what I'm talking about here, right?
Yeah, for sure. I'll tell you, the weather people did a fantastic job of scaring the heck out of my elderly 89-year-old mother.
That's good.
So they did their job. Okay. And just like the government-controlled corporate media does a fantastic job of making sure the stock market stays put, making sure that
that's their job.
And making sure that the Fed is the good guy in the narrative, and that the deep state stays in control, at least for now. So we all have a job to do, and your job and my job as an investor and as the head of a household that we care about is to watch our own backyard and watch our finances and make sure that our financial house is in order. Okay. Because I believe self-education is really the only way out of the shrinking middle class, the collapsing American dream. Your way out, my way out, is to listen to podcasts like this one, as well as to avail ourselves of the resources out there, because the middle class will not exist within our lifetimes. I'm 47 years old, so I've got a way to go before my time has passed. But I know that within my lifetime, there will be no middle class, unfortunately. And if people want more information on that, we actually have a report on that. It's at portfoliowealthglobal.com/enemy, ENEMY. It's about the death of the middle class, the elites taking over, the wealth gap getting worse. Even the wealthy themselves, Ray Dalio, Jeff Gundlach, and others have discussed this in depth. But it has been getting worse, regardless of who's in office, administration after administration. And again, it's all about getting that self-education, because the government is not going to protect you. Trust me on that one.
Yeah, well, I thought the government was here to help.
Oh, well, I know that you're being facetious, but a lot of people believe that, and it's unfortunate. But you and I are here to, I believe, at least I'm here to dispel that notion, to let people know that self-sufficiency, self-reliance, even to the point of learning basic skills on your own in case you need them, learning how to use a firearm. Learning how to, sustain agriculture and farm on your own, grow your own food. There's nothing wrong with doing that. And owning precious metals. And we can certainly discuss that. I love talking about gold and silver because, yes, the dollar has been strong, but anyone who thinks that that's going to last for much longer is unfortunately operating under a delusion.
Yeah, well, you never know when I hope that it goes on forever and ever and ever. I'm not rooting for the defeat of the country or the currency, but you got to be realistic. And I think the U.S. has had its day in the sun. We might have a couple of fights left in us here, but let's face it, things are pretty bad out there, and they've been getting worse. And, this isn't the best economy ever. I mean, that's just the way it is.
Yeah, it's unfortunate, but true. And that's not a knock against America and what America stands for. I'm very proud to be an American. And I believe that you and I are protective. We have our protective instincts. And so we don't like to see the dollar, its value being deteriorated, even as it remains strong for the time being. But we have a president who wants a strong dollar, and he's going to, a weak dollar. We have a president who wants a weak dollar, and he's going to get it. Trump has gotten most of what he wants sooner or later, and he'll get a weak dollar. He wants it to be more competitive so that people and organizations and companies overseas will be encouraged to use the dollar in trade.
Yeah.
Yes, the Fed will continue to print dollars into oblivion. Also, due to the trade war, we all may agree or disagree with the trade war. That's fine. We all have our opinions. But keep in mind, on Sunday, the United States imposed additional 15% tariffs on $300 billion worth of Chinese goods. What that means is that approximately 92% of all apparel imported from China will be subjected to taxation paid for by American companies and consumers. So what does that mean? That means we should expect increased inflation in a big way and very soon. And unfortunately, there will also be, so in other words, I expect the dollar to be devalued in a big way very soon. Also, unfortunately, as Goldman Sachs analysts have pointed out, the tariffs will have an impact on American GDP, gross domestic product growth. To quote Goldman Sachs, the most recent proposed tariff escalation would boost U.S. consumer prices slightly further than previously estimated and would reduce U.S. growth slightly further as well. And they also added that they've raised their estimates of the impact to GDP growth to 0.7% by the end of this year. That may not sound like much, but with GDP growth at around 2% right now, every bit counts, and it's counting against it. So, like it or not, whether you agree with the tariff conflict or not, whether you think we can even win this or not, it doesn't matter. It's on. It's going to escalate. And the impact to the American economy, the impact to your and my purchasing power in America is going to be impacted in a big way.
Yeah. Well, what's a little purchasing power among friends, right?
Well, it is a big deal. The U.S.-China trade war has entered into its 18th month. It's gone on longer than most people would think. It has contributed to a rally in bonds. Meanwhile, Treasury yields have been absolutely crushed. I'm going to look at the latest numbers right now. The 10-year T-note is at 1.459%. Keep in mind the lowest was 1.38% in June of 2016. So it's on a downward spiral, which means that I'm sure when you were younger and when I was younger, there was a time when savers, retirees could get a fairly risk-free 5% yield on bonds.
What was wrong with that?
I'm sure you remember that.
Yeah, why was that so bad?
See, what was wrong with getting 5%? That way, let's say if somebody is getting into their golden years and doesn't necessarily want to be exposed to a risky stock market, and let's say they had saved up $100,000 or $200,000, they would have Social Security coming in, which is going to be insolvent within our lifetimes. They had pension plans, which are being defunded year by year, month by month. So, all those safety nets, along with a fairly risk-free 5% yield off of their nest egg, which they had hopefully saved up over time, could possibly sustain them through the rest of their lives. So now, 1.4, 1.5%, what's that going to get you? That's less than the inflation rate even. So you're actually not even standing still. You're going backwards. So what all of the dollar devaluation that's going to come, the further rate cuts that are going to come. I mean, there's 100% probability of a rate cut in September estimated, according to analysts.
No question.
Yeah. All of these are gold and silver bullish massively, very massively. So if people are thinking that, okay, we had a major upswing in silver, It's been going up 1 or more % every day. Gold is on hold, as I like to say recently. So the gold to silver ratio is starting to normalize finally. This is all very bullish for precious metals and miners. If people want to go to portfoliowealthglobal.com/gold playbook, we talk more about the gold to silver ratio and how you can play it for really amazing gains. It's a great way to tell you how to allocate into gold and silver and how much to get of each one in your portfolio.
Mm-hmm. Yeah, well, a number of years ago, I did a formula for it. And the formula, it's a little weird, I will admit. But if you assume that gold appears 1/10 as less in the environment or in nature as silver, meaning 10-to-1 ratio of physical presence in the environment, then I said for every 1 ounce of gold, I want to own 10 ounces of silver. And to my knowledge, nobody's come up with a better way, but to some extent, let's face it, David, your allocation is going to be somewhat arbitrary. So,
right.
And it's individual specific. You can't.
Yeah.
There isn't one rate that's right for everyone. So I like 10-to-1, but maybe you like 20-to-1. Does it really matter that much?
Yeah, no, in the end, it's portfolio specific and situation specific. And but that 10-to-1 is a fairly reasonable guideline. But again, we allocate according to which one has shown strength, which one has not, which one is lagging. Right now, gold is trading near a 6-year high, and silver is just killing it in the markets. The gold to silver ratio, as you mentioned, it went up to 94, which has happened very few times since the gold window closed in 1971, the year of my birth, interestingly enough. Now it's 79.4 is the gold to silver ratio, still a bit elevated. And so just because silver has been on a tear, that doesn't mean that's short term. Okay. Long term, it's still way behind, which means that it's perfectly reasonable to allocate more even into silver, or at least as much as gold. And I'd like to give a few picks, specific actionable ideas right now, if that's okay.
Yeah, but please do.
Right now, I'm all about the royalty companies. I love their business model, and the top 3 ones by market cap and trading volume as well are Franco-Nevada, FNV, is a ticker symbol. Wheaton Precious Metals, WPM, is a ticker symbol in the United States, as well as Canada, interestingly, and Royal Gold, which is RGLD. And I'm not telling, I'm not a licensed or registered investment advisor. I'm not telling anybody to buy these things or not to. You have to make your own decisions, do your own due diligence, of course. But the royalty and streaming business model is really fantastic. Yes. They're kind of like, if anybody's ever seen Shark Tank, those angel investors, right?
Yep.
Kevin O'Leary and the bunch. Well, they're kind of like that. And so what they do is somewhat de-risked. Compared to just going all into miners themselves. They don't have to deal with necessarily the local politics involved in mining. They don't have to deal with any failures in terms of equipment, things like that. Infrastructure failure, things like that. And so they loan the money, the capital, so that these miners can get funding for their projects, either to start it or continue it, and then they get a stream of either a percentage of profits, or they get gold or silver at a very reduced price. Either way, it's a great way to go. And so those are just a few ideas if people are considering getting into royalty companies, but you can also get into the gold and silver companies themselves. Just be very careful because they are speculative.
Yeah, hey, we've got some great companies that sponsor us that one like SINO Gold, it's gone up, it's doubled, more than doubled. It came out at 35 cents Canadian a share a month ago. I think it was a month ago, July 25th, and it's trading at 80 cents Canadian. So you've had tremendous moves in quality because they had a discovery. They now officially have a resource, and that makes all the difference with the miners. So I love the streamers myself for the simple reason that, and I say this somewhat tongue in cheek, that mining is the worst business in the world. And I love mining. You know I do. But what's really bad about it is you got to deal with governments. You have to deal with environmental protection, remediation, and they're always changing the rules, not to mention shady governments in many parts of the world. And the Canadians, for the most part, seem to have mastered the ability to deal with this type of adversity. But it still is a very risky business. But when you get one that hits, and we both have seen it, man, it's like smoking pure crack. It's a real high. Not that I do it, but I've seen people do it on TV. It doesn't look like my kind of drug, but you know what I'm saying? It's like when you hit it, like when I hit 2011 and I had 12 baggers, and I had 5 baggers and 6 baggers, and I had like 15 of these stocks in my portfolio. I thought I was a total genius. Now, of course, I was an idiot, and I'm the first to admit it, but I did, unlike just about everybody else in the sector, I actually sold out damn near the peak because I just said, it just can't go up anymore. It's just like too much. I wish I had done it with other parts of my portfolio, but I didn't. But point is, you can't go wrong. If you're convinced that precious metals are going up, the streamers will make it, and they've got leverage to the upside because their cost per ounce, they're either going to get the equivalency in dollars or they're going to get, like you said, the actual allocation, the actual metal. I think that at this point, they're getting to the point they'd rather have the metal, but whatever's in their contract, that's what dictates. And the beauty is that their cost might be $300 an ounce for gold, just arbitrary numbers, and $5 for silver. So when you have $19 silver, David, right, that is like a no-win, a no-lose proposition for them. And a lot of these mines, you think they're taking advantage, and to some extent they're opportunistic, but a lot of these mines would never be opened without these streamers coming to their rescue. It's just specialty finance, basically. That's what it really is.
Yep, so I like it a lot. And as Ray Dalio once said, if you don't own gold, you know neither history nor economics. And so, there's, and here's an even better quote from Norm Franz: Silver is the money of gentlemen, barter is the money of peasants, and debt is the money of slaves.
And gold is the money of kings.
Yep. And so you can own debt. And that's what bonds are. And that's what cash is, by the way. It's a debt note. You're trusting the government with your wealth, which I don't personally.
That should work out.
I believe silver and gold, either the physical is a great way to go. Leor Gantz, who is one of my mentors, recommends, if you can afford it, to own 2 years worth of your household's typical expenditures, annual expenditures, 2 years worth of what you might spend in 2 years. Own that much in gold if you can. Now, obviously, not everybody can do that, but just own as much as you can. So if the what hits the fan, trying to keep it family friendly here.
Yeah, we're a family show.
If it hits the fan, then you will have you will have hard assets. You'll have something that will have value no matter what. Even right now, gold is at an all-time high against 72 currencies worldwide.
Yeah, I know.
So, just because it's not at the all-time high against the dollar, Really, that just tells me that once the dollar finally does go down, as the president wants it to, he wants a cheap dollar, as we mentioned, then gold will fly. I mean, gold has been flattening out for the past couple of weeks, but as they say, the longer the base, the higher in space. So let it flatten out for a while. Let silver be the celebrity. That is fine. I'm okay with that. I own both, so I don't have a problem at all.
Same here, but I'd rather see the silver go up. The one negative about silver, we're talking practicality here, and this is the ultimate pragmatism, is being ready for when your government totally screws everything up and, basically the money in your pocket is worthless. So silver is like, it weighs a lot more than gold, and that is a big negative. So storage becomes a factor. So you really need to figure this stuff out. Storage, you need to be, you really need to know that, your storage needs are taken care of. We've actually got a free report on how to get 24/7 access to your gold under armed guard, behind bars, free. All right. And you can just write me for it. I'll send you the report, kl@kerrylutz.com. But, everything you're saying, I couldn't agree with you more, David. It's not a question of if it's going to hit the fan. It's merely a question of when. And every day that this goes by, we're a day closer to it, to that eventuality. So when you think inflation is going to really be picking up, we're going to go inflationary rather than deflationary?
Yeah, absolutely. Why do you think, and not you know this already, but, just speaking rhetorically, why do people think that countries like Russia, China, Poland, they're all stockpiling gold like crazy? Hungary, Turkey, Germany, France, Italy, all shoring up their gold reserves in a big way. Why do you think that billionaires, multi-billionaire fund managers like Jeff Gundlach, John Powelson, Ray Dalio, they're all pro-gold. They're all bullish on gold and precious metals generally. There's a reason for it. It's because not only is gold a crisis hedge and a safe haven asset par excellence, and has been for 6,000 years plus, but also because, as we've discussed, and I think that's the common thread of this discussion here, is that as the dollar declines, gold really will shine, and so will silver. Silver is like gold's more volatile little brother. Sure, it goes down hard when it goes down, but it also it flies like an eagle, which it has been doing for multiple weeks now. And so if anybody who is not at least considering getting either the physical, as well as, get some miners. You had a fantastic recommendation there. I had my own ideas for royalty and streaming companies. Just consider those. And I'm going to check out your report for sure, because people need to know how to store it. How to insure it.
I don't want to say it. I don't want to say it on the air because I think it's problematical, because the technique we're using is totally, shall we say, outside the box.
Gotcha.
The storage facilities.
But if people write to you, I know that you'll give them that information so they can get it. And that's super important information. And we have to learn how to deal with, how to work within what we have. Trump is the president, and he has his policies in place. He wants a cheaper dollar. He is willing to escalate this trade war as far as he can, as far as it will go. He's not going to back down. Those of you who voted for him, you wanted a man who speaks his mind. I respect that. You wanted a man who would not back down. I respect that. And so, but that is going to have an impact, at least short term, on the economy, and sooner or later on the markets. And so I want people to know how to navigate the Trump economy. We actually have a report of our own on that. People can download that right now, portfoliowealthglobal.com/Trump, TRUMP. Our guide to navigating the Trump era as an investor. You may like the price action of the stock market. You may think it's too high. I think it's rather overvalued, to put it charitably. But you have to work with what is here. I mean, the yield curve, so many yield curve inversions are in place right now. Yeah. So what does that mean? Does that mean that the stock market is going to collapse tomorrow or next week? No, it does not. But it is very likely to happen within 18 months. That is what has happened historically. When you get the 2-year Treasury yield above the 10-year, when you get the 3-month Treasury yield above the 10-year yield, that is bizarro land. And it's a spectacle, but it's also the precursor very reliably, very consistently to economic contractions. It's happened before the last couple of them. And it is very likely to happen again. But again, it could take up to 18 months. The timing of it will be interesting, whether the collapse or reset happens before or after November of 2020 is going to make a big political difference. But again, because I'm allocated correctly, I can sit on the sidelines somewhat with my positions, and I can watch it and eat popcorn and just have a good time. And if the reset happens before November of next year, I'm good with it. If it happens after, I'm good with it, because my positions are apolitical. They're not political at all. I'm not a red state. I'm not a blue state. I'm all about green. I'm all about helping people to make money.
And that's the way it should be. And David, we really appreciate you coming on. So again, the place where you find David's work and you get his free reports is portfoliowealthglobal.com. Go check it out. I think it's a real positive, and you'll learn a lot from it. Promise you that. Hey, questions for David? You think his view on the economy is right? Do you think he's spot on with gold and silver? Please write us, KL@KerryLutz.com. The Twitter feed's @KerryLutz, Facebook page, Financial Survival Network. If you're listening on YouTube or any podcast platform, please subscribe, like, and share this information with somebody who you think it will help. If there's one idea in there that you think is valuable, you owe it to your friends, your family, to share it and get the word out. David, really appreciate you coming on. We will talk to you again real soon.
Thank you, sir. Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.